Hello, and welcome to the second installment in our special series on technology investing with John Markman. In our last podcast, John answered the first question from doubting Thomases among our listeners. Who is John Markman, and why should we believe him? We learned that when it comes to technology, John is effectively the insider's insider. At the LA Times, they won two staff Pulitzer Prizes. At Microsoft, he was co-founder and leader of MSN Money. And above all, he specialized in finding new tech superstars, which, not coincidentally, is the name of a new service he'll be launching on April 8th. John, welcome back.
Hi, thanks for having me.
Thank you. You ready for the next question from our skeptics?
I'm all ready.
It's very simple. Why tech stocks? Why not focus on some other sectors instead?
Well, I love the fact that you even have to ask because, 15 years ago, no one would ask why tech stocks. It was just assumed that those were going to be the superstars. But, once they crashed in 2001, 2002, people really, they felt as if they had been cheated by, by a group of stocks that they loved.
Yeah.
And they said, oh, never again. Well,
Right.
then in 2006, people started to feel 2003, 2004, 2005, people started to feel a little bit better about stocks right up until the the point of the 2007, 2009 crash and they fell out of love with stocks all over again.
Right.
And so now, you come along and say, "Hey, why tech stocks?" And it's like you're coming from a point of disbelief, and that's fantastic because it's this gulf between disbelief and then some belief and then some great belief that we can make money.
In other words, when there is disbelief in the marketplace, you are able to find better buys. Is that what you're trying to say?
Yeah, when people are skeptical about stocks and they're not buying them, they're not bidding up their prices,
Right.
and that's really the case now. Even though we're in the middle of a 4-year bull market, that one that started in 2009. Um, a lot of technology stocks have done well, but not as well as they could, and you can really see that in the valuations of some of the top tech stocks. Look at something like Apple,
Mm-hmm.
trading at 10 times forward earnings. Well, in a fully valued environment, Apple would be going for 20 times earnings. And if people were really super excited about stocks, Apple would be trading at 50 to 100 times earnings.
Okay, so can we look at recent performance and maybe explain that and why it's how it's happening?
Well, sure. In 2013, the average tech stock outperformed the S&P 500 by 50%.
Why?
Yeah, because they're growing much faster than the average stock in the S&P 500. The GDP growth rate right now is around in 2013 was around 2%. The average growth stock is growing at least at 10%. And in my opinion, that level is going to accelerate up to around 15 to 20% for the very best names that I recommend. So this is really a great time to arbitrage the difference between what people think is happening and what's really happening.
I see. And what about this year? How are tech stocks doing compared to S&P
Well,
500?
the S&P 500 is slightly underwater for this year, and tech stocks are up. So, you could say that tech stocks are beating the S&P by about 6 to 1 right now.
Okay, but if S&P is down, then you can't say it's beating it by you can't even compare the two. So that six
But
to one,
mathematic,
6 to 1
mathematic,
must be based on an earlier data point then.
um, that's a good point mathematically, but from a practical point of view, yeah, I think it's safe to say that the average tech stock is beating the S&P by at least 5 to 1.
Okay. Um, what is it in the tech stock world?
And by the way, the stocks that I recommend are beating the S&P by a lot more than that.
Okay. What is it about technology that makes it interesting? I know these are dumb questions, but they're questions that that I have to ask because I'm the skeptic and I represent the skeptics.
Well, sure, no problem. Well, technology
Mhm.
is responsible for some of the most important megatrends, that have occurred in the past and are occurring today. Tech megatrends change the lives of billions of people. I'll give you an example. The explosion of mobile communications via wireless. technology has connected the 7 billion people on the planet in a way that could never have happened otherwise. Technology, you could say, even was for the elite 5 years ago. Technology that was for the elite 5 years ago can be used by children today. And massive new business models are being built around just this one trend of connecting people through small handheld devices. And it's hard to understand that in a way because it's happening so quickly. But it's really a massive change in the way people interact with each other, and there's lots of great ways to take advantage of that through tech stocks. And the same for healthcare. Drugs and therapies today can solve big problems like AIDS and hepatitis, illnesses that killed people regularly in our lifetimes. I think we all know people who die of AIDS in the 1990s, early 2000s.
Sure.
And you rarely hear about people dying of AIDS today because of the tremendous therapies that biotech companies have developed. And if you can invest in these kinds of companies, if you understand what these companies are doing, you do not need a PhD or any special knowledge. You can be very successful.
Right. But other sectors are also impacted by megatrends and these kinds of things. Why? Again, I asked you the question again. I hate to belabor it, but why should technology be an important focus for investors like us?
Well, I think that technology is a great opportunity because it's literally the most misunderstood, and therefore there's the greatest gulf between what people think now and what they will think in the future. The reason we can get doubles and triples and 10 baggers in this space is because there's the biggest sort of information disequilibrium. Yeah. And it's our job, it's my job as an advisor to help you understand the difference between what people think is happening now and what's really happening and what's likely to happen in the future.
It makes a lot of sense. I totally get that. You mentioned earlier in an earlier podcast some picks that you've made that have really done better. You said it a moment ago also that some of your individual picks have done better than the outperformance we discussed for the tech stocks as a whole. Could you give us some examples of that?
Well, sure. I mean, I've been talking a lot about a company called NXP Semiconductor. NXPI is the symbol. It was spun out of a big Dutch company called Philips Electronics back 2 years ago. And when smaller companies are spun out of larger companies, there's usually not a lot of knowledge about them because they haven't been around very long. But NXP is really a leader in making the kinds of sensors that make your iPhone or your Android device so amazing. And I was able to spotlight exactly why NXP Semiconductor was likely to be a leader. I recommended it for my readers back in 2012, and it's been a double for us since.
Any others?
Sure. There's a company I found called Cornerstone On Demand. It's a business learning and talent management platform. I discovered that company very soon after its IPO. It was not very well understood after its IPO, and the stock went down quite a bit afterwards. But the more I started to learn about it and why it was important, I became extremely excited and recommended my customers buy it, my readers buy it in mid-2012, and that's up about 180% since. Splunk, the company I mentioned before, it's a big data analysis firm. It's up about 155% since I recommended it in mid-2012. Another one I like a lot is provides relatively inexpensive photography for the internet for businesses and individuals. Value has risen 230% since I recommended it.
Let me ask you this. What percentage of your recommendations have been losers?
Sure. Well, if we're just talking about these post-IPO tech stocks, I've been recommending them, let's just say for the last 2 years, just taking a window in time. About 7% have been losers. Sometimes you make a choice and you think you've got a good idea on your hands, and it turns out not to be. That's going to happen. So about 7% of the stocks I've recommended in the last 2 years have been losers, and the rest have won big.
93% winners.
Yep, that's
Nine,
that's
nine,
the, it's the math. 100 minus 7 would be 93.
I guess it is.
You see, you
Thanks.
don't have to have a PhD in math to be a good investor.
Okay, thanks. John, over the past several weeks, both in emails and on the Money and Markets blog, you've gotten a lot of probing questions, a lot of doubting questions, and we're going to address each one of them in this series. But you've also gotten one very positive question, which is one of the most frequent of all, and that's simply this: what tech stocks do I buy now?
Well, as I've told you, Martin, for that, I think we need to meet in person. So the best time for me to do that would be on April 8th, if it works for you.
Yes.
That's when I'll be on the East Coast. I'll be on a trip to New York and then on to Florida. And I can meet you in your studios.
Wonderful. What is your agenda? What are we going to cover?
Well, I'm going to give you a play-by-play scenario of the most powerful, most sustainable technology megatrends in the world today. And I am going to name leading companies in each of those fields. And I'll announce my picks.
Wonderful. Plus, at the same time, you're going to open enrollment to your new service, right?
Yes, we're going to open enrollment to our new service at that time.
Okay. Everyone listening to this podcast, please make a note. The time we've scheduled for that gala event is 2 p.m. Eastern Time, April 8th. Registration is now open, and to register, you can just click the button below. And of course, don't miss the next installment in this podcast series, which is coming this Saturday. To join, just come to this same page, same time as today. Thank you very much. Have a wonderful day.